Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's TGI. Thank God it's Friday, the 5th of May, Bull versus Bear webinar with Steve Miley here on the call for Trade Day. Welcome, everyone. Payroll day, helmets and goggles at the ready. Talking of payroll day, so this is going to sound like a lecture. I don't like giving lectures. But we have the FOMC meeting. We have this no trading 2 minutes before or 2 minutes after. There's only like a few data points in the week, right? It's not like we're not allowing you to trade much, guys. It's sorry, not even in the week, in the month. Excuse me, not even in the week, in the month. It's CPI and employment report, right? We got the employment report today. CPI is next week, okay? It's the Fed meeting and the Fed minutes, right? Unless you're trading oil, unless you're trading agricultural, right? So it's the oil report as well, the EIA oil report, and then the ag reports, okay? The reason we have them in there is because there's huge, very short-term volatility over those, and it's very difficult to make money. You're probably going to lose money, and we don't really want to be funding people who are going to take big risks with our real money in live accounts. We had a funded trader do it on Wednesday. We had to fail the account. We had 12 evaluation challenges we had to fail. Now, as a percentage, is a small amount. So I'm probably talking to people who already know this and following the rules. You guys are coming on the webinars. I'm sure you're just, good boys and girls. But I'm going to say it anyway, because we try and get the message out there, and we still get people coming back. I didn't know the rule. I didn't know this. I didn't know that. We've sent emails. It's in the forums. It's on the heads up. What else are we supposed to do, right? So I'm going to say it again here on the webinar. You can't trade 2 minutes before or after the employment report, right? Don't do it. Don't put the orders in. Don't have resting orders, whatever, because we'll fail you. And then you've got to either buy a reset or you've lost your monthly subscription or whatever it is. Okay. So don't do it. Just don't do it, guys. Okay. Employment report today, lecture over. All focus on that. It's coming up less than an hour. All eyes on employment, helmets and goggles on for that one. Okay. Potentially volatile. Now, counterintuitively, you kind of want to go. Well, what you want, if you're a stock index bull, you want this to be what we call Goldilocks, right? Not too hot, not too cold, just about right. In line is probably good enough for the market to go up. Okay. I think what you don't want is a strong jobs report. Powell said, seeing some cooling in the labor market. They want cooling in the labor market. They want the labor market to be less tight. We have a very tight labor market in the US and to an extent globally. We want to see a bit of a easing in the labor market. So not have such a tight labor market. Tight labor market equals upside pressures on wages equals upside pressures on prices, means more hawkish Fed, higher interest rates, lower stocks. It's kind of a bit counterintuitive. A strong jobs report, if we get a super strong jobs report, I don't think that's good for stocks. It's a little bit counterintuitive at the moment, right? And you don't want a super weak jobs report, because a super weak jobs report probably means then we're heading for a recession, and that's not great either for stocks. Okay, what you want, I think, actually a slightly weaker than expected jobs report. So for the NFP number, we're looking for, where is it in here? There we go. 180,000 we have as consensus on here. If that came in at 150, 160, I think that's probably a sweet spot for bullishness for stocks. Above 250s probably means actually stocks down, and below low 100s is probably stocks down as well. It needs to be around or just below, in my opinion. Unemployment rate, we're looking to tick up from 3.5 to 3.6. 3.6 would be good. I think the market will like that. It doesn't want really 3.7. Definitely doesn't want 3.8. Equally, 3.5 is probably no good either. So probably a slightly, as it were, worse for the employment market report, which I think would actually be positive for stocks. If you're a stock bear, you want this to be as far away. I think in either way, as far away, either a very strong number or a very weak number is probably good for bears, okay? Because it either means recession if it's a very weak number, or it means a more hawkish Fed if it's a strong number. And either way, stocks won't like that, in my opinion. Average hourly earnings, we need to keep an eye on that as well, see where that comes in, because obviously that's feeding through into inflation. So all eyes on this. Remember, no trading 2 minutes before or after. If you are trading FX. Not many of you guys are, but if you are, you've got double bubble, double trouble with the Canadian employment report as well today. It hasn't got it on here. There is I think it's Cook speaking later today. Not got it on this calendar. I did see it on another calendar earlier on today. So I think Cook might be speaking later on today. So watching out for that as well. Earnings wise, so looking back before we look forward, and I'm actually not going to carry on. Today's going to be the last day. I'm only because I'm looking back. We had Apple, and Apple's sort of kind of a bit saved today. Stocks were lower yesterday. Concerns about the regional banks. Regional banks got smashed again yesterday. Absolutely smashed. 50, 60% down, down from their, massively down from their peaks. But Apple was the Apple was shining. Positive numbers on iPhone sales, as well as the revenue and EPS numbers coming in strong. So that helped a rebound in stocks in after hours and followed through in here this morning. So Apple helping things out, and details of Apple iPhone sales inch up, bolstering results amid shaky economy. So that's all positive. And then the other thing is we have had regional banks have rebounded on pre-market changes. So even though it says deepening route in here, so actually let me see if I can see the latest 5 things, because this is the 5 things I can tell you. That one there is from this morning's European one. Let me see if I've got the updated US one in here to see if they talk about just bear with me, because that's definitely in here, May the 5th. It's just thought, is this morning's one? Yeah, no, it is. So this is it. So payrolls data, banks rallying. So we've had a rebound this morning on the overnight, on the pre-hours. Much as 20% in pre-market from PacWest. Having had a massive fall yesterday, Western Alliance, Bancorp, First Horizon up 15% and 5.4%, but they were down like 40, 50% in 30, 50% in places. So we have had a rebound. Obviously, all eyes on payroll. Nothing we don't know there. Kind of covered that already. Pentagon seeing a meeting between US Defense Secretary and Chinese counterparts. So potentially a positive, slight positive in that. And so stocks are rebounding, having sold off yesterday, and all eyes on the jobs report. I'm glad I went and found that one. Just winding back though to yesterday as well, we did have the ECB. They delivered kind of as expected, but there was an outside chance that they went 50 up. They went 25 up, okay, but indicated going higher. The question here is, are they able to effectively diverge from the Fed? The Fed have gone on pause. We know that from Wednesday. Fed went on pause. And then the curve, if we look at the CME curve in here, is pricing in, even though next meeting nailed on for no change, right? Outside chance of a hike, actually. But if we go to September, we got cut definitely by September. Even as early as July, we got cut being priced in, maybe a cut. This has shifted from just this morning, okay, because of the bounce in the banks. This was much higher this morning. This was above this, okay. So we were looking for a cut in July. Now it's kind of pretty much even, but this was higher this morning, just in the last 3 or 4 hours, because the banks have rebounded. September, though, we are looking for a cut by September. By November, we're looking for potentially 2 cuts, 450, 475, and by year end, 2/3, maybe 3 cuts. Maybe 4 cuts. Look, this is 4 cuts, a whole point lower. This is 3 cuts. So the market's still very much pricing in a more dovish Fed to come. The Fed didn't tell us that, certainly didn't say that on Wednesday. In fact, they left the door open to more hikes, right? But the question here is, can the ECB, who have said more hikes to come, how far? History says that they can't diverge from the Fed for too long, but there might be a short-term divergence. But past experience suggests any divergence won't last. What else do we have in here? Bank says surge, so rebounding higher. Nothing really driving this. Just markets, right? Sold off aggressively yesterday, jumped again today. No real reason. But Apple, positive from Apple in here, taking the broader market back higher. Maybe then that's lifted the mood here. But I mean, there's no real reason. Bargain hunters coming in maybe ahead of the employment numbers in here. JP Morgan. No, this is just bigger picture. This is more investment. Looking to invest in gold and tech. With recession fears. Oil has rebounded this morning, but oil was down 10%. Still looking for a weekly loss of 10%. And so oil getting smashed on global recession fears, US recession, global recession fears, but has rebounded this morning with risks. We had a risk-on move this morning, basically, is what I'm trying to say. Not really driven by anything much than Apple. And there's Apple. Look, Apple comforts as payroll looms. And then slower job growth expected. Unemployment rate seen going up to 3.6. So the number is actually lower. So if I go in, let me see, do we have, oops, wrong one. If I click in on the employment number, where is it? The payroll number, there it is. In here, we go and take a look at the charts. Why is that not loading? It's not loading. That's annoying. Let me see. I'm going to try and pop it in another tab. Will it open it in a new tab? No. Okay, well, if you look at the chart though, this number is like what we're expecting is low, right? The number is low compared to what we've had over the last. We've had numbers have pretty much been in the 200,000s up to the 300,000s, right? This is a low number, so it's showing that the market is starting to tighten. Okay, so it is a low number anyway. What else do I have for you in here? So we've spoken about oil, morning bid. We've spoken about that. Slower pace of job growth. ECB, we've kind of covered already. Slows pace hike, more to come from the ECB. Central banks stick to rate hikes, so 225 from the major central banks. But then watching obviously the market turmoil being the crisis that we're having still, the ongoing crisis. And what we got in Europe this morning, we're up about half to 7/10 in here between the UK, German and French indices. And if we look at where we are, so we sold off we had basically best part of 1% yesterday down, and we're back up about between 0.5% and 0.75%. So got back a lot of last week's losses in here. I'm not going to go into much depth in here on the charts in here, but if we look in here, so we did just undercut on the S&P the low from last week. Okay, just undercut that, and obviously boom, we've got back most of the losses in here from yesterday. Apple, and then the follow through this morning. And there's no, as far as I can find, right, as far as I can see, there's no news. It's just a rebound, right? In my opinion, it's value buyers coming in on those regional banks on the off chance that we get, a better number. But the market in here, certainly we're seeing that rebound going on. And if we go in onto the 30-minute chart, what does it mean? We were probably looking at the trend line here. It's going to allow me to come across here, right? But really above this overnight, this swing peak here. So 41, 18? 41.18 is going to be critical on the top side, a break up through there. The NASDAQ not as damaged. We're a long way from the lows in here from the end of April, okay? And got back pretty much all of yesterday's losses. Doesn't look anywhere near as negative on the NASDAQ. And if we got the kind of this topping lines that come across this much steeper topping line, maybe that comes across like here, right? Actually, we can take it all the way from the top. Let me stick this one across the top there. That kind of works across there through these points here. So that one works. That's a long way ways, right? But this one we're kind of already broken down through. It'll allow me, we're broken down through that. But really, it's like this overnight peak. So this little rebound peak in here. 13,147. That's my trigger on the upside. Below the lows, lower, obviously, right? Below yesterday's lows, boom, and maybe before. Okay, I'm going to wrap it up there, guys. No trading 2 minutes before or after. Please don't put the orders in. Please don't do it. We don't want to fail people. We don't want to take your money. Honestly, we don't. I'd rather you show me what you can do at trading, and that's what I'd refer you to do. And the rules are there for a reason, right? Because it's just too risky. You are not going to beat. The reason the rules are there, right? You're not going to beat the algorithm, right? You're not going to beat the algorithm. Let's face it. We're not as quick. We're just not, right? Humans are being superseded. We're not as quick as the algorithm. You can't beat the algorithm. That's why, let the dust settle. It's only 2 minutes. There's going to be loads of opportunity after the 2 minutes after the number. There's still loads of opportunities. Just be patient, yeah? And it's just a way of donating money. You get the odd one. People think they can trade these kind of data. You get the odd one, you make money. But for everyone, I'm off from trading now. Trigger fingers set aside. Well done, Peter. Okay. All right, I'm going to wrap it up there, guys. Have a great trading day. Be careful through the payroll. don't keep the fingers off the buttons after the first 2 minutes. I'll be back with you now. Actually, point of information: no webinar Monday. UK holiday on Monday. I'm not going to be doing the webinar. James is not available. So UK holiday. We have a new king. We have a new king being crowned tomorrow. So we have a holiday, public holiday on Monday. And so there will be no webinar. We will return with the webinars on Tuesday. All right, guys, take care. Have a great one. Have a great weekend. Bye.